First quarter, now we in the fourth quarter, man.
Welcome back to the fourth quarter, the number one show for the business of sports and entertainment, the only place for it, Siraj. And today is a very special episode, even though it's a rainy Tuesday morning in New York. We're in front of Lady Liberty, but we have it's a special episode because we have an audience for the first time in T4Q history. Behind the camera, in addition to producer Pablo, we have friend of the show, Jade Esposito, my former coworker at Fanatics, and she treated us with some coffee and tea this morning. So
shout out to Joe Coffee.
That's what it's called, Joe Coffee. Okay, in the West Village. Love it. Jade, welcome, and I hope you enjoy the show. Today is actually wild because this headline story is arguably the most insane story in sports business history ever, and definitely the most crazy story we've covered at the fourth quarter, because it's jam-packed. It's literally a Hollywood grade business deal with the sale of the most iconic franchise in the world, mixed with FBI investigations, mixed with a real life succession drama story that's happening and taking place and playing out in real time. 5 days ago, Josh Kushner and the ex-Disney CEO Bob Iger just did a blockbuster deal to buy the Los Angeles Lakers for $12.5 billion. They bought 65% of it, and it was the largest price ever paid for a pro sports franchise. Here's the crazy part, Siraj. So they bought it from Mark Walter, who owned the Lakers for 10 months prior and bought it at a $10 billion valuation. So $2.5 billion gain in under a year. And there was no auction, there was no bankers, there was no process to bid. Bob Iger and Kushner supposedly just reached out, and the whole deal took place in 3 days. So just a reminder that we can just do things sometimes. But Kushner runs a $10 billion fund called Thrive Capital. They just did a deal with the San Francisco Giants, and Kushner was previously an owner in the Memphis Grizzlies and the Miami Heat. But now, and then him and Josh Kushner were circling the Vegas bid, the Las Vegas NBA franchise extension bid, and out of nowhere, they just come out and just break all headlines with this. And here's a surprising thing. There's an investigation going on with the seller, Mark Walter. It's super complicated, supposedly involving, I don't know, insurance fraud. Like, break this down for me.
Yeah, so, excuse me, essentially Mark Walter, he's been very involved with insurance businesses. He has multiple insurance businesses under his portfolio, but at the same time, he does a lot of investments. And so the way it works is that you can actually use your insurance companies to loan money to your investment platforms in order to finance certain deals.
So he owns investment platforms and insurance companies.
Yes, and so you technically can actually loan from your insurance businesses because a lot of them have their own private credit arms. But
which is wild.
Warren Buffett is actually known to have done this for a long time now. But here's the thing.
And a lot of big private equity firms do this, right? Because they own an insurance business more likely than not.
Right, exactly. Okay. Customers pay up front for their insurance, and at the same time, in order to justify a premium, they're able to invest it, right? And so what you can do is you can actually loan from these insurance companies, but you have to disclose it. And so he only disclosed about 3% of the loans that were related party investments, but the FBI actually investigated and saw that it could be up to 40%. And so it's a little bit crazy in regards to that disclosure. And the reason why they do it is because a lot of people who are, taking insurance from these platforms that Mark Walter owns, they have the right to understand, okay, where's this money actually going? And so he's been a bit of a pickle there, and he actually needs to pay down those loans because otherwise, personally, they might investigate and he could deal with some charges. And so I think that's the reason why he ended up selling the Lakers. And we're going to talk about this later. He might be selling some other assets as well.
Oh yeah, we definitely do. We were thinking about putting all of it together, but that was also so big of a piece of news we had to separate it out. But just continuing down the Lakers thread, so Mark Walters, Josh Kushner, Bob Iger, that's one piece, and a separate piece is the existing holder, minority owner, but they've held an ownership stake in the Lakers for nearly 50 years, the Buss family. So yesterday morning, a bombshell dropped. So the 6 Buss siblings of the Buss family held a vote on whether to exercise a tag-along provision attached to Mark Walter's transaction, meaning they get to also sell as a part of that gigantic transaction to Bob Iger and Josh Kushner. And the provision required 4 of the 6 siblings to vote to trigger. And Supposedly, it was reported that it carried. And midday, Shams Charania of ESPN reported that the family was selling its remaining 17.8% stake to Kushner and Iger, taking that ownership group to 83%. And that Jeanie, who is Jeanie Buss, the current governor of the LA Lakers, would lose the governorship because the NBA rules require a governor to hold at least 15% stake of a team. And then a Buss family statement went out saying it's time to use this opportunity to move on and exit gracefully while we still can. And then in the afternoon, we were concluding our research, and then it came up and we had to add the reversal. So Jeanie Buss's attorney, Adam Streisand, sent a letter to her siblings' lawyer saying that she never consented and the sale cannot happen. This is some real life succession stuff playing out. What do you think of this?
So this is actually the one time where Shams actually got it wrong, because he reported it and said that it happened. But in reality, if you do the digging, there's actually like a trust that makes the final decision in regards to a Lakers sale.
Okay.
And so it gets a little bit complicated, but essentially there's a tag along provision. Whenever a team sells, and a lot of new buyers end up providing this provision just so that minority sellers can get an opportunity to sell at the premium that the controlling owner does. So Mark Walters had this provision where the other tag along or the other minority investors could sell at this $12.5 billion tag, and that Josh Kushner and Iger have the rights to do it. And so all of the Buss family members, or the siblings, 5 of them, end up voting. But the way that the trust works is that there's only 3 of them. I believe it's Jeanie and 2 other of her siblings. They have to have essentially she has to vote on that, and then that trumps the provision or the tag along.
Interesting.
Provision.
Okay.
And so that's essentially what the lawyers were saying. So the lawyer came out and said, hey, Jeanie Buss didn't vote on this. And in fact, it's actually doing her a disjustice for making this decision without her. And so so now there's a decision on whether the tag along or this trust, which one takes more priority.
Honestly, this might be more interesting than what's happening on the court with the Lakers, with LeBron leaving and all the drama that's about to ensue.
Yeah, apparently LeBron actually said that if he knew that this was going to happen, that could have affected his decision to stay.
Really?
Yeah. So I don't know. I think there's a lot of things. There's a lot of moving pieces. And I think that also this issue that Jeanie is dealing with right now could cause an issue for Mark Walter, because the more that this is delayed, the harder that Mark Walter is going to get the money that he needs in order to pay down his loan. So now there's essentially multiple parties that are affecting each other's decisions.
Interesting. Okay. Well, Mark Walter, he's not going anywhere because we have more on that story and another team later in this show. But moving on, we're changing things up. We've normally buried this thing later in our show, but it's becoming the audience's
No, it's our best segment, honestly.
best segment. Producer Pablo, you got to hit the new fund alert again.
Fund alert.
We went 19 straight weeks with new sports media entertainment funds being announced in a row. And then somehow, I guess VC summer and investment summer is a thing because no one launched a fund for a week. And we were at Novig's office last week, obviously. So we went 2 weeks without filming a new fund alert. And now we're back.
Another one.
The tennis goat, Serena Williams, is rebranding her VC firm, Serena Ventures, to Starfire Ventures. Her and her partner.
That's a good sound, Pablo.
That's a great sound. Her and her partner, Beth Ferreira, are writing $5 million to $10 million checks into tech and AI-enabled companies focused on 2 core investment theses. So one, it's empowering individuals, and the second is the experience economy. And their track record is actually very impressive. She raised $111 million for her debut fund under Serena Ventures. They had 100 investments. 16 of them were unicorns, meaning they surpassed $1 billion valuation. Prior checks were anywhere between 100 to 500K, meaning that's what they were investing into companies. So now with the 5 million to 10 million, that's literally a 10 to 50x jump in what they want to invest now. And her sports business portfolio is honestly second to none, right? Toronto Tempo, she joined the ownership group as the managing partner. Unrivaled, she invested in the Series B of the 3v3 Women's Basketball League at a $340 million valuation. And her family invested in Angel City FC. It's pretty iconic. Beth Ferreira, her partner, came from WME Ventures, which is the ventures group and ventures arm of talent agency WME Endeavor.
She's also had some operating experience as well.
Yeah.
I think she was an executive at Etsy. She was CEO of Fab.com as well. So I like that operator / investing role when you're coming into a platform like this. I think that's what VCs should have.
Okay, so I have a question for you. So we're seeing athletes and celebrities getting into venture, and specifically, they're not even venture, it's the startups. You have Emma Chamberlain's Coffee, Alex Earl's launching a bunch of stuff. She's becoming an investor in a bunch of different things. Do you think we'll see a pipeline or a trend of talent agency VCs being poached to become in-house athlete and celebrity-owned, investors?
That's a really
funds?
interesting trend. I think it comes down to how prolific of investors are these talent agencies. I feel like some of their investing isn't as sophisticated as others. WME has a very sophisticated venture platform. CAA does as well. I believe UTA is much more synergistic. It's like, hey, let's invest in startups or companies or build products around celebrities that make the most sense. So I think it's much more strategic than just, hey, we're building out a full-blown venture platform. I think what's super exciting about this athlete trend is that a lot of times portfolios were built on just pure angel investing. And Serena Williams started Serena Ventures as just a pure angel investing platform back in 2014. And it was completely stealthy. Like, she didn't tell anyone about this.
So she was just making a bunch of money on the court, and then she was investing that.
She was investing, and
herself.
she wasn't very loud about it at all. And she wanted to keep it, quiet until she saw that there was a clear track record that she can go and raise a full institutional round. And so her first fund, Serena Ventures, was $111 million.
That's right.
Like, that's a pure institutional platform there. And so I think it's really exciting to see that athletes are taking this next step where they're a pure general partner running a full institutional fund. It's not just building up an angel portfolio. What I'm really excited about, I think this also plays into the talent agency perspective, is that they're looking at very unique creators that they're backing. And at the same time, they have really interesting agendas that I think are good in the venture space. Serena's backed 16 unicorns out of 100 companies that she's invested in.
Right.
But also, she was telling Vogue back in 2022 that 78% of the entrepreneurs that she's backed are people of color or women, right?
Yep.
And so it's actually funny. She just made a joke, like, my husband's white though. So like, at the same time, investing in white people would also be building up on the diversity play as well. But like, I think that's
Shout out
really,
Alexis, by the way.
Yeah, shout out Alexis.
Big fan of the fourth quarter.
Both of them are doing awesome stuff in the sports space.
That was good, Pablo.
That's a new one. Pablo
that's
hit us
good.
with like 3 new ones in a row.
Yeah, he said I asked him to surprise me, so I'm glad. That was good. All right, so you were saying?
Yeah, but honestly, I think Starfire is a super interesting new approach where let's go into the experiential. Let's continue to back tech founders. As much as she's involved in the sports space, I think that there's always a new frontier to hit within sports, within experiential. So I'm super excited to see what checks what companies she ends up investing in. And also, if it's early stage and $5 to $10 million checks, we're going to see her also lead a ton of rounds as well. So she's going to be very much more involved
100%.
in a lot of the companies that she backs.
And more growthy rounds, I'm sure, rather than pure
100%.
early stage
10
stuff.
million, I feel like you can get into like a Series A, Series B, right? So
Yeah, exactly. Well, moving on to the transfer portal. In the world of sports business, knowing where the money is going is one thing, but knowing where the people that run the industry is arguably as important, if not more important, than where the capital is going. In this segment, we track where the people are going and moving from one job to another within the space. So first up, we have Julie Haddon. She joins the WTA Ventures board. WTA Ventures is the Women's Tennis Association's commercial arm, created with CVC Partners in 2023. CVC, the big private equity firm, invested $150 million for 20% of this of the company or entity at an implied $750 million valuation. Julie Haddon, if you don't know, she's a beast. So she's been a prolific operator in media and entertainment. She was the first ever CMO of the NWSL and the National Women's Soccer League, and was previously at the NFL, sat on the board of Fubo TV, was early at DreamWorks. She's stacked, and I'm excited to see what comes from her addition to WTA Ventures. I think she'll start bringing in more sponsors and making it more prolific hub for brands to activate on the growing platform. Tim Brosnan is the Big East commissioner now. So he is 68 years old, but he's not old. He spent 24 years at the MLB.
when was 68 ever old, Sid?
It never was, but he's definitely not, because I was prepping for this and I saw a few videos of him, and he's very energetic. He's given speeches, Hall of Fame speeches, all these different things. But he spent 24 years at the MLB, ending in 2015, excuse me. He was the EVP for business and the president CEO of MLB Enterprises. Surprisingly, he was actually one of the finalists for the MLB commissioner back in 2014, alongside Rob Manfred, who is now the commissioner of the MLB. So awesome to see that he's taken on a role in the collegiate space and will help make the Big East a prolific conference. And lastly, we have Andy Launane, president of Austin FC, who became the CEO. So congrats to him. Day-to-day operational oversight of both business operations and soccer operations. And he was the MLS Executive of the Year in 2022. And he's worked for a bunch of different MLS teams. So this guy is stacked, to say the least, and probably one of the most qualified people to be taking that spot.
Let's go. Congratulations to all the executives that are making big moves. Every single week, I feel like it's 4 or 5 of them. Like,
it's a mandatory segment for us now. So that's awesome to see. All right. Welcome to Money Moves, where we cover all the business moves surrounding professional sports teams and leagues. This arguably could have been our headline story too, because this is pretty insane, but this one was a big one because an all-star investor consortium of Jeff Bezos, Facebook co-founder Eduardo Saverin, and sports investment juggernauts Amit Bhatia and the Mittal family all bought a 30% stake in Liverpool FC, the iconic football franchise, for $1.9 billion. It values the football club at more than $7 billion, and they have the option to buy a majority stake within the next 12 months at a $8 billion valuation. So they have a clause in there to own a majority. So the seller, Fenway Sports Group, based out of Boston, obviously, they retain majority control. Here's the surprising thing. They paid $475 million for 100% of Liverpool in 2010. And now the 30% slice that they sold is more than 5x of what they paid for the whole thing. It's wild. So congrats to them. They just made a bag.
I mean, they're fantastic operators. Since they bought Liverpool, they actually won the Champions League as well. They've done a great job as well when it comes to building out their stadium. And I feel like they bring the American operational influence and culture that, let's be real, has been a profit maker in the US and brought it to Europe. And I think it's really tough to do that because the culture is different just in soccer overall. And at the same time, fans don't want to be, upsold on tickets every single year. But they've done a great job embracing their, culture, and at the same time embracing the fan base as well. It's like the perfect middle ground.
I mean, you don't see many moves like that where you get like a huge exit like that
premium
in sports, right?
Yeah.
So Fenway Sports Group, for those of you that aren't familiar, they have one of the most successful investment vehicles of all time. Some of their portfolio includes the Boston Red Sox, the PGA Tour, and many, many others. LeBron James and Maverick Carter are investors, are part of the ownership there. Redbird Capital, a lot. So I'm excited to see what else they do, but congrats to the team because they just made a lot of money.
Yeah, it'd be crazy if Bezos actually does end up becoming the majority owner, given this clause, right?
So 1892 Holdings is the name of the consortium, and it's represented by Amit Bhatia, who is a British Indian investment banker, financier. We covered him recently.
Yeah.
He's been making a bunch of moves in addition to the Mittal family. They've been all around sports, right? They were attached to the Seahawks deal that Vinod Khosla ended up
attached to the
taking.
IPL, 2 big franchise sales that happened there. So
Exactly. So how it's structured is they have Amit Bhatia, who is the chair, essentially.
yeah, he would be basically like the primary owner,
primary,
right?
yeah. And then you have the Mittal Family Trust, K5 Sports with Jeff Bezos as the lead investor. So cool to know that there's some sports entity publicly that's associated with Jeff Bezos. We got to hit him up, maybe get him as subscribers to the fourth quarter and get him on the show.
Yeah,
honestly.
let's hear why Bezos is making a bunch of moves in sports.
Yeah, and then EE Capital, the family office of Elaine and Eduardo Saverin. So question I have for you here is, we've seen this over the last months. I feel like I asked you this last week, but I have to keep asking you this. There's more tech money that's coming into sports. What do you think of this? Is this iconic? Is this just something we're going to keep seeing? What do you think?
Well, I just think that sports is a trusted asset now to diversify from, because a lot of these tech investors, all their money is in AI, but let's be real, AI is eating up a lot of other industries based on just new jobs that have been taken or just the overall sentiment. But I think that sports is highly defensible. So if that's the case and these asset valuations continue to skyrocket, then I think it's worth investing in now before it becomes extremely, extremely expensive down the line. I mean, we talked about this we wrote a newsletter about this with the Lakers. There was a 25% premium in 10 months. If you actually break down the economics, it's super, super expensive of a franchise. On paper,
even though we
given
said
how
it was
much money
undervalued.
they actually make on a revenue and also
What was the
profit.
multiple on
It was
revenue?
almost 20 to 22x. And just for comparison, NVIDIA trades at a 20 to 22x multiple, and they're growing at 85% year over year. So fundamentally, the economics is oh, that doesn't really make sense, but really you're buying generational IP that will never go away, given how fundamentally human sports is, and it cannot be replaced by AI. So that brand becomes even more and more powerful because it connects throughout history. There's very little IP that does that. So I just think tech investors, they're smart, they're savvy, they see this opportunity, and they're going to tackle it.
Completely agree with that. And not only did he make our show once, but I don't know if this is a good thing for him or not, but whether he didn't make the show once, he made it twice in one recording. So what we've been alluding to before, billionaire Mark Walter, who was associated with the investigation for the Los Angeles Lakers sale, is now being investigated for, obviously continued by the SEC and FBI, but now he's also looking to sell his stake in Chelsea FC, the iconic London-based football club. He's exploring a sale with his fellow billionaire Chelsea co-owner Todd Boehly, who's also a prolific sports investor, as they're looking to sell to Clearlake Capital, which is a private equity firm with nearly $190 billion assets under management, who's also the current majority owner. So the ownership split, this is pretty interesting. Clearlake owns 61.5%. Boehly and Walter both own 12.8% each. And despite Clearlake's majority ownership, the 2022 agreement gave Boehly and Clearlake and Walter joint control and equal governance. So even though they're minority investors, technically on control of the club, they both have similar rights. And here's a key structural point that I want to make here. There was a 10-year lockup period from the 2022 takeover where Boehly and Walter's shares can only be sold to Clearlake or Hans-Jörg Weiss, who is a Swiss billionaire. And there's basically no negotiation. He can only, if now that Walter needs to exit his position, supposedly, to get liquidity to pay down his debts for his investigation regarding his insurance companies, he only has two potential buyers, right? And now the leverage isn't really with him, it's with Clearlake and the opposing potential buyers. So yeah, and Chelsea, just to say, I'll put a price tag on it, Chelsea's worth nearly $5.8 billion. So it won't get him, I did the math, 12.8%. It comes out to like a little over $730 million. So and he needs $8 billion. I don't know if you saw this.
I saw this. I saw that Joe Pompliano actually tweeted about this, but like, it's a lot of money. And I think also like, we saw this too. And I think you might touch on this, given the story, but like there was reports that he might even collateralize his stake in Guggenheim Securities, I believe, which is his investment platform as well.
So he's most known for Guggenheim, this prolific, it's not even an investment bank. What is it? It's like this.
It's like, no, it started off as an investment bank, but also it does securities and it's an investment platform as well. So like they give it as like a Swiss Army knife. Like they can do advisory work and broker deals, which is what investment banks do. But at the same time, they do have an investment in securities platform as well. Like they probably manage money through the public markets, also invest in alternative assets as well. So they're pretty much the Swiss Army knife that you can think of. There's a lot of platforms that do this as well. Like Blackstone, for example, when they had PJT previously, they were doing both. So that's what he's known for. And the fact that he's willing to collateralize means that he does need a lot of capital.
And he needs double-digit yield. We were talking about this. What does that mean exactly?
Yeah, so essentially what he's saying is that if he's going to take a loan or a personal loan, he's willing to give an even fairer price, which is, hey, well, I'll pay a 10+% interest on this loan in order for you to take it. Because objectively, like he is in a cash crunch. He just needs the cash now to pay it down. Look, he's still going to be a mega billionaire, in my opinion, obviously.
You think he comes out
He's going to preserve
unscathed?
the Dodgers.
Okay.
Yeah, I think he's going to come out unscathed.
Okay, so you touched on the Dodgers, but for the people that don't know, Mark Walter's sports portfolio is actually second to none. So he owns a 27% stake and is the controlling owner since 2012 of the LA Dodgers. The LA Lakers obviously bought for $10 billion and just sold, or is in the process of selling to Bob Iger and Josh Kushner. He owns the LA Sparks. He owns Chelsea and Strasbourg, 12.8% of Blue Co. PWHL, he doesn't own a team. He owns the whole professional league, right? TWG Motorsports, which is Cadillac F1 and a few other racing entities. And then Billie Jean King Cup, he is a part owner in that as well. So it'll be interesting to see what he exits from that or what he needs to free up to get liquidity. But
I think he definitely keeps the Dodgers. He keeps LA Sparks likely. And then I think PWHL, like he should keep PWHL. That's like his, I don't think you go and sell that business right now.
Yeah, professional women's hockey is on a rocket ship. But anything else you want to add there?
Nothing else. I want to talk a little bit about some culture. I feel like there's a big cultural headline that happened recently. The GOAT, LeBron, He just secured a 2-year, $8 million veteran. Sorry, that was such a random sound, but I love that sound. After securing just a 2-year, $8 million veteran minimum with the Sixers, he made a move that no one was expecting.
What do they make, Siraj?
He started his own personal YouTube channel, and it's simply called LeBron James.
Okay.
Just called LeBron James.
So I thought it was going to be vlogs, though, but it's not just vlogs.
So it's not a vlog. It's not his own podcast either because he's got too many of them. Not about, and he's got 2 of them. Not about basketball. He's officially in his creator era. He launched a YouTube golf channel. So he's going to chronicle his own journey with the sport he recently just picked up. As you guys have been seeing on social media, he's been playing golf for the past year and a half. The debut episode brought together members of the 2016 Cleveland Cavs championship team as they celebrated their 10-year anniversary. So it was LeBron, Kevin Love, J.R. Smith, who actually went back to college to play golf.
J.R. Swish.
Richard Jefferson, Tristan Thompson, and Channing Frye. And in the video, they run a 3v3 scramble at Castle Stewart Golf Links at Cabot Highlands in Scotland.
It was a beautiful course, by the way.
Beautiful course. They're playing golf, sipping wine, reminiscing about the game. It's pretty awesome, but here's the thing. We all care about the numbers. How did his first video do? Posted 2 days ago, already hit 1.9 million views. Channel's at 510,000 subscribers. And here's the thing. It's an hour-and-a-half video. And let's be real, most of his fans, they're Gen Z, Gen Alpha, and attention spans are cooked, with the doom scrollings. But the GOAT combined with YouTube golf, I feel like that's a recipe for high retention. I feel like our generation will sit through an hour-and-a-half video of Bob Does Sports or Grant Horvat. So they'll do the same with LeBron.
I can't speak for the other types of videos he's going to do, but at least for that one, I'm not a big golf guy. And I watched 40, 45 minutes in one sitting of that video on my phone while I was eating because it was nostalgia. It was like the 2016 Cavs winning NBA championship winning team. And right after that, I switched it to a docuseries, a fan-made docuseries on the Cavs winning the 2016 championship.
Right, so you went like on a trip down memory lane.
Yeah. It was cool to see like them reminisce, them still being friends. I would have liked to see Kyrie Irving, but maybe he's not a big golf guy.
Yeah, maybe he's not a big golf guy. Also, like he's still like very involved in the league. Like he's actively playing, so it might be a little bit different. He's probably practicing. But it's really interesting because I think that this is going to be a full-blown channel. He plans on posting once a month on a Saturday. And essentially he wants to just go on and essentially a world tour where he plays the most epic golf courses. He does it with his friends, other creators in the platform. I actually saw that I saw a recent tweet actually. He was hanging out with Austin Reeves, Bronny, and Bob Does Sports. So they were all like playing golf. Maybe foreshadowing probably what the next video is. And what's really interesting is that the banner on the YouTube channel, it's the crown in like red background. I feel like he's going to launch his own golf apparel line.
Oh, that's such a good take. That's such a good take.
Yeah, so I think
he was wearing that in the episode, but I thought it was just like regular Nike stuff that he has, but it makes perfect sense.
Yeah, I mean, Steph Curry's also trying to launch his own golf apparel line with Li Ning.
Yeah.
So
Under Armour.
So maybe there's a little bit of competition there. And then the last thing that I want to end on this story is I think that this is the creator era for athletes. Typically, athletes will launch their own podcast where they talk about the sport that they once played in. But I also think that athletes are obviously multidimensional. They've been on camera for so long. They've been on the limelight. They're great personalities that have really cool extracurricular activities that they're doing, right? Miles Turner is a big Lego enthusiast. I saw something about Larry Fitzgerald is like huge into photography. I think we saw that Pat Connaughton has a huge real estate portfolio. I think that we're going to start seeing more athletes tap into their creator bag outside of sports.
And I'm a fan of that. I'm excited to see more of that type of content. Yeah. But Siraj, we moved to a new segment, same segment, new name that you named. So it's only right that you introduce this section.
Yeah. So we usually call it, what is it? It was Deal something.
Deal Desk.
Covering
M&A investments and M&A and major investments in sports. But You said the name was trash.
I'm calling it Deal Team 6.
I like that.
We're going in.
So producer Pablo, we're going to need a new sound bite for
maybe a
Deal
Call of Duty
6.
sound bite. I feel like that'd be a really good one.
Like Deal Team 6. Was that good?
That's a good one.
That was good.
We should just clip that, Pablo. Use that for the next video. But yeah, we're covering the biggest M&A investment deals in sports. This time we're talking about another go of a different sport,
legend.
Football. Tom Brady was back in the headlines with CardVault by Tom Brady, the leading national retailer dedicated to sports cards and authenticated memorabilia. They announced their first strategic investor group to support the company's next phase of national growth. And it was a star-studded cast of investors. They got Jay-Z, Aaron Judge, Dana White, Raising Cane's founder and CEO, Todd Graves.
Wow.
Patriots owner, Robert Kraft with Kraft Group. Redbird Capital
one.
founder, Gerry Cardinale. Hit another one again.
Another one.
Silver Lake co-CEO, Egon Durbin and Greg Mondre, and of course, many others. So it's kind of cool.
Dana White too.
Dana White
I mean,
as
this
well.
is crazy. This is this is wild.
Crazy list, and it seems like there's no like institutional investors, all individuals, which is pretty awesome. And so what they're trying to do is just expand to multiple brick and mortar stores across the nation, at the same time expand into digital and build out their distribution channels. So a little bit of history: Tom Brady acquired CardVault. He acquired a 50% stake in CardVault back in February 2025. They only had 3 locations.
Okay.
Since then, which is around just a year, they've expanded to 17 stores nationwide. And his long-term vision, this is an interview actually said in FOS, he said he wants to build a network of 100 plus stores located in the premier sports entertainment destinations. So think of like major stadium districts and marquee cities. And he also wants to go beyond brick and mortar and have his own digital commerce and automated retail channel as well. So he's kind of going for the kill shot in the collectible space. And it's pretty awesome. I think that CardVault does have potential to build a de facto brick and mortar collectibles brand. The way that I see it is like, it's like the Rolex store of the collectibles industry. It's like kind of luxury. You walk in, they have the signature vault. I think that it's elevated card experience. At the same time, it has a Tom Brady name as well, which is aligned with luxury in the sports space in some sense. So I think that it's really good for a lot of these collectors who are, and I say this all the time, I'm not a big collector myself, who are stuck in the in-person and not the, digital, pack ripping, like nonstop. I think this is something that's more attuned to the more classic collector. What do you think? Do you think they could be like the number one?
I have no qualms with what you said. I actually agree. Even though I want to take some stance to make a conversation and pushback, I actually completely agree with everything you said. This is the Michael Rubin strategy. Get your friends and prolific public profiles, figures involved in your business. They have a personal stake vested in the success of the business.
Yeah.
They get to personally endorse it. I think this is extremely smart.
Yeah, you're getting more Topps cards across in-person locations. I think that's really smart.
Yeah.
And they did this with Lewis Hamilton too, with card culture, and they're going international with that. So I think that there's obviously a great Fanatics play here.
And Michael Rubin was behind both of them, by the way. So
yeah, so he's backing both
He made
of
the
them.
introduction from Lewis Hamilton to the David Adams folks. So I'm excited to see what comes from this. I think it's super smart. And yeah, I mean, we know we're big fans. That's why we have a collectible section in addition to this.
And we went to the Soho. So we go to the Soho spot pretty often, honestly.
Yeah, well, yeah. And it's a great gift, actually. We got a couple gifts for some people. Vasu Kulkarni for his birthday, for his 40th birthday. He's founding partner here at Courtside. We got invited. That was a surprise, by the way, that we even got invited to his birthday. But he's a big Jordan fan, and I went to CardVault, and I got him a Michael Jordan graded card.
Let's go.
There's a PSA 5, but
PSA 5, hey, you never know.
Hold on for dear life. All right, well, this is a fun segment. I'm moving on to the partnerships podium. So sponsorship is one of the multi-billion-dollar pillars within sports, so it's only right that we have a dedicated section towards it. So similar to F1, we're having a partnerships podium. I'm saying 3 different partnership deals that happened this past week. P1, P2, P3, you have to rank them, okay?
Okay.
So what's third place, second, first? And I'm going to list them really quickly, and then you pick after, okay? First up, The Rock, Dwayne Johnson, is breaking up with Under Armour. After 10 years, Dwayne Johnson is ending the Project Rock partnership with Under Armour, but he owns the Brahma Bull trademark, and he'll be going to shop for a new factory and manufacturing partner, essentially. Under Armour stock, if you're not familiar, I hate to say this, but it's in the gutter. It's trading,
how much is it down right now?
It's trading at $5.29 per share, and it's down 77% over the last 5 years.
Okay, 77%.
And it's the second signature icon that has left the brand in 9 months. Steph Curry left late last year. We covered this. He signed with Li Ning. I mean, this is just like hit after hit. But anyway, that's the first one. Number 2, Oura, the fitness tracking ring, just signed Coco Gauff and Taylor Fritz, the top-ranked American men's and women's players. Coco is the highest-paid female tennis athlete in the world, and they signed them 2 weeks before the U.S. Open, which is taking place in New York.
Smart.
Oura is already the official wearable partner of the U.S. Open on a 5-year USTA deal. They also are partners for U.S. Soccer, the LA 28 Olympics, and the U.S. Olympic team. They're valued at, Oura is valued at $11 billion, which we covered, obviously, we've been covering for a while. A few months ago, they confidentially fought for an IPO, and they've sold 5.5 million rings, and they have 1,200 partners across wellness and medicine. So that's number 2. And number 3, MyFitnessPal is now the title partner of HYROX Tampa, the HYROX race that's happening in Tampa in October of this year. It's a fitness competition that supposedly has 2 million partners, or 2 million participants, that's been taking over. It's like a race meets obstacle course meets, it's fun. It's a group exercise kind of thing. They're making $200 million in revenue. That's up 250% year over year. MyFitnessPal will have HYROX specific recipes for fueling athletes in their app. And this is, you thought this is kind of like a laggard brand, even though they have a big follower base. They have 280 million users. But
they just bought Clearlake too, so
yeah.
All right, so I have to rank them.
3, 2, 1.
Okay,
yeah.
so number 3, I would probably put the MyFitnessPal HYROX.
Okay.
I think that it's nothing like super special. I do think that like it's smart for them to tap into the HYROX community, given that it's gotten so big, and at the same time, these are the exact demographic that you want to be using your platform, especially when it comes to calorie tracking, fitness tracking, and making sure that your brand is aligned with the up and coming sports in the space, right?
Okay.
We obviously have talked about MyFitnessPal as the brand is kind of like detracted. I think it was smart to buy Clearlake, but aligning with HYROX is smart for them.
Agreed.
Second is better. Oura Ring partnering with Coco Gauff and Taylor Swift.
Okay.
Taylor Fritz is really smart because Whoop has actually made a huge commotion and noise and has taken advantage, honestly, of tennis a lot faster than any of their competitors. They've worked with Carlos Alcaraz and Sabalenka as well. And there's a huge controversy where I believe it was the Australian Open. They wouldn't let them wear the Whoop band, and that was huge publicity for Whoop. And it was actually good for
Whoop is actually losing in the tennis sponsorship game to Oura. Oura kind of has all the marquee properties, and Whoop is the official partner for the WTA Women's Tennis Association.
Right,
So,
but there's an issue with wearing it specifically, and that was what caused a lot of commotion, which was good for Whoop. And I think Oura should take advantage of this. I feel like there's opportunities for them to make a loud noise in the tennis space. And at the same time, it's smart to partner with a Coco Gauff. I believe Oura has more women using Oura than Whoop, right? So lean more into that, especially when it comes to supporting women's athletes as well. So it's smart to partner with Coco Gauff. And then number 1, I think it's Dwayne Johnson, because the reason why I think this is the case is that I think that there are certain celebrities and only certain celebrities and athletes where their brand can transcend one of their apparel partners. And I think it's the Steph Curry. In my opinion, I wish he just built his own brand, but he partnered with Li Ning. I think The Rock can do that himself. I feel like he's big enough of a platform, just straight up, that he can just build his own apparel line, and he doesn't need a partner with an Under Armour, because you run the risk of dealing with a laggard brand.
Do you think Nike picks him up?
Potentially, but also Nike stock is declining as well. These apparel lines aren't doing that well, and so you're aligning with a brand that some people are saying, oh, it's on the down run, right?
Sure.
And so I think you don't want to put yourself in a risk of that, because like you said, Steph Curry ended up leaving. The Rock should just double down on himself.
Okay, fair. You're the one judging it, not me. And before we move on, shout out to our friends at Snapback Sports. They just announced a groundbreaking jersey patch partnership and deal with Sam Houston State. So shout out to Jack Settleman and the entire team. Big fans, obviously, love what you're doing and want to keep supporting. Moving on to the emerging league news section, is this a $1 billion opportunity or not? So this one's a little personal because we had a meeting this past week at Inner Circle Sports' office, met with the founder, Steve Horwitz.
For those who don't know what Inner Circle Sports is,
it's a boutique sports-focused investment bank. They just got acquired by William Blair. They've done a prolific amount of sports deals, and
including the Atlanta Hawks, which
including
is
the
our
Atlanta
favorite
Hawks.
team.
And we saw the deal trophy, and we took a picture. Producer Pablo, you're gonna have to throw it up on the screen. But we made, or one of our videos one of our first videos that went viral was about Inner Circle Sports being acquired. So Steve ended up seeing it, and we ended up building a relationship with him. And when we walked into the office earlier last week, he brought his entire team out to meet us. So we felt like
we
celebrities.
met literally every analyst, associate, VP at the team, and they're all super nice, very sharp individuals as well. Like, I've been a banker before. I've seen what a good banker is, and I can just tell by talking to them, they just knew their stuff so well. So,
But it just seems like it doesn't even seem like a bank. It seems like he's running a really cool, like, environment.
It's got a cool
Office,
vibe. It's very it's like the team camaraderie is at an
seem very
A1.
close.
It feels like a sports team kind of, rather than just like, hey, this is just our job. Like, we need to just crank as many deals as possible. It's like, no, it's a team. We're going to have fun with this.
Yeah, and some of my favorite conversations there were with Rob Tillis, the CEO, Lindsay Rispoli, and Tommy Elia, who were talking to us about what I want to talk about today, which is League One Volleyball, a 19-month-old emerging league with the mission to put volleyball on the map. Just hired the sports-focused investment bank, Inner Circle Sports, to be an advisor to sell teams in its professional league. So Inner Circle Sports is advising on expansion markets, ownership opportunities, and strategic decisions. Love B, that's short for League One Volleyball, has now sold ownership in 7 of its 10 teams, reportedly at $20 million a pop, which is wild. Love B has raised $160 million to date, and they've had a $100 million growth round of financing in 2024 from Atwater Capital, Left Lane, Ares. So yeah, it's pretty interesting. And if you want to know the growth of volleyball, I didn't know this because it's pretty fascinating. So girls volleyball, there were nearly 500,000 high school participants in the 2024-2025 season. It's the number 2 girls sport behind outdoor track and field. First of all, I thought cheer would be higher for some reason, but I guess not. And total high school participation hit an all-time record of more than 8 million in 2024-2025, and it's up nearly 200,000 year over year, participants year over year.
Wow.
So it's wild. And so that's just like volleyball, the youth sector, right? So then 2025 NCAA women's volleyball on ESPN, all records. The regular season averaged about 190,000 viewers, up 36% year over year. And the tournament had 1.3 billion minutes watched, which is absolutely nuts.
Dang. I mean, I also think that League One Volleyball is really tapping into building the infrastructure for youth volleyball, right?
It's a youth sports roll-up that happens to also have a professional sports league.
Which is smart, because at the end of the day, if you get more youth sports volleyball players, and at some point college, the infrastructure is getting built out because they actually have broadcast rights, at some point in time, there's going to be a lot more talent. Once there's a lot more talent and there's already attention being built on the collegiate level, that's where the opportunity is on the professional level. So I see this as like a very long-term play that ends up, I think this will be $1 billion opportunity in my opinion. Wow. I actually think at some point in time, they're going to merge with, I believe it's Major League Volleyball. At some point there will be one league. We've seen this with pickleball, the NFL, AFL, right? Like
pickleball.
And like we've seen this with pickleball as well. At some point, every single league will consolidate into one. And at that point in time, it'll definitely be $1 billion business. I would say probably in the next 5 to 6 years.
Okay.
I would say give it 6 years, they're merged, and they're $1 billion business. And Inner Circle Sports will probably do that deal.
Are you locking in the T4Q prediction?
I'll lock it in right now.
We need a button for next time. But
what's the button though? It's got to have like a big buzzer beater sound too.
Okay.
We need that.
Producer Pablo, make that note. I don't know why I didn't say this earlier, by the way, but the pro side is even crazier. So Love Beat 2026 on USA Network averaged over 108,000 viewers, and that was up 46% year over year, while Unrivaled fell 44% and TGL fell 37% in their second seasons.
Wow.
So kind of crazy.
So it's
right?
like, I mean, look at the second season. That's where the real long-standing value is, right?
Completely agree.
All right, let's talk about some startups and tech. I'll make this quick.
All right, run this through.
This is really just a state of the union around the fitness industry. There was a recent report by Crunchbase that fitness and wellness startups raised $3.6 billion in the first half of 2026, which is a rebound after a 6-year funding low in 2025. But it was mainly concentrated on one specific thesis, and it was investors focused on tracking health data rather than hardware used for exercising, which was a big trend in the 2020s. So can you guess who the biggest winner was in 2026?
Who?
It was Whoop. They raised a whopping $575 million Series G, valued a little over $10 billion. That was at the tail end of Oura, which raised $900 million just the year before. And as we can see, all of the big money moves that were happening in health and wellness were all in data trackers. You had A-Sleep. They raised $50 million at $1.5 billion. Smart Sleep Technology tracking company. Ultrahuman, which is an Oura Ring competitor, they raised a $44 million Series C. They're actually partnered with Abbott to add glucose tracking as a core offering.
Wow.
And then Signos, which raised $20 million for its FDA-cleared glucose monitor and is building an AI coaching layer that converts glucose data into personalized metabolic guidance. So clearly, metabolism is a very important health data tracker biomarker that they're trying to look into. And so by comparison, Tonal and Hydro, the biggest smart gym and exercise equipment, haven't raised any funding in more than 3 years. So the investment thesis is really around data collection, recurring subscriptions, and how can we use AI to do this? The only exception to health data was in-person fitness. For example, HYROX, we saw the L. Catterton deal that happened. We covered it previously, where L. Catterton was going to take potentially a majority stake. And that was going to be a valuation of up to $1 billion. And then we saw Xenon, which is essentially a HYROX competitor. It's a decathlon of fitness. They raised $15 million as well. So we're going to see that data tracking is going to be big. Smart gym exercise equipment is going to be something that the investors don't really care much about, but potentially traditional fitness and investing in Pilates and just high value, low cost gyms is going to be an interesting trend. What we saw with the Zillow for gyms as well, gym pricing. It still seems like gym is a huge culture, but right now no one has created a full blown brand that's done it right since like Crunch Fitness or even Lifetime. Then Equinox is like the luxury component. But maybe there's going to be a next company that is in the running in the next 5 years.
Let's see.
We'll see. And then got to run into collectibles.
All right.
I got a fun one for you. So Cooper Flagg's 1 of 1 numbered rookie debut patch, autographed card. It's just been pulled. Jason Williams of South Carolina. He spent $515. He purchased a spot on a live stream, actually. It was a Rhode Island live stream.
It was a live stream?
It was a live stream.
That's
and
crazy.
he pulled the card in the live stream. It was a Rhode Island baseball cards retail shop that they opened a bunch of trading cards. He pulled it live. And what's crazy about this card, it's a game-worn patch. Worn his NBA debut in October 22nd, 2025. Also, he signed the card at Fanatics Fest in July.
Wow.
Sucks that we didn't get to see. We were, walking around Fanatics Fest. I didn't see Cooper Flagg
I didn't see
yet.
Cooper, yeah.
But a similar card with Paul Skeens, obviously Pirates pitcher dating Livy Dunn. If you guys don't know it, who either of them are. It sold for $1.1 million. And Ken Golden, who owns Golden, which is one of the biggest like auction
houses,
platforms,
yeah.
he offered a $1.5 million cash advance to whoever pulled it. But here's the catch. The Mavs are also putting out a bounty for this card.
Wait, like the Dallas Mavericks?
The Dallas Mavericks. They're
His
offering
the team he plays for.
the team he plays for.
Okay.
They're offering 2 premium lower level season tickets for 32 years, signed game worn flag jersey, VIP experiences, a trip to see the Mavericks play in Boston, and a private 5-on-5 game with friends at American Airlines Center for the card. And here's the thing. I'm going to pose an interesting question. For some more context about Jason Williams, he's a 51-year-old machine shop owner and a father of 5. He's been collecting cards since he was 12. He's been super big into this. But the last card that he pulled that sold for a lot of money was Lamine Yamal for $4.5K. So he hasn't had like a big hit. This is the one. He can be a millionaire. Should he sell to Ken Golden for $1.5 million, or does he take the Dallas Mavericks deal? What do you think?
Okay. If it was me, I think I would have sold it. But you said he has a family of 5.
He does have a family
That's like
of
a
5.
starting 5 right there on American Airlines Arena. So he has like 60% of the team, including himself. All he needs is 4 other people. We're offering up ourselves if we want to go, reach out to make a video about this. Hopefully reaches him, goes viral and reaches him, and he invites us. But those are second to none experiences to enjoy with your kids and your family. I think the wholesome answer is to take the Dallas Mavericks.
Really? Okay.
Yeah.
I think
Wow, you're gonna take the money?
I did the math and I was looking at this. So 2 premium lower level season tickets, probably like $10,000 each per year. It's like 20,000 times. It's like $600,000 worth of value, I guess, right?
Okay. From the tickets alone.
Yeah, tickets alone, signed game worn flag jersey. Who knows what game that was? Maybe dropped 50 points on somebody and he won the game. That could go for a lot of money. VIP experiences, don't really know how to put a price on this.
Okay.
I think you just take the $1.5 million because he might not even be a Mavs fan. He's just kind of like, I don't know, he's from South
that's
Carolina.
true.
Like he might not
That's
really
true.
care. Maybe he's like, I don't know. Honestly, I don't know.
So you would take the money?
I would take the money. I mean, he's got 5 kids. I don't know. Maybe
Goes
goes
a
into
long
like
way,
college
yeah.
tuition and stuff.
Yeah,
So I don't
fair.
know. But yeah, that's what I think. I think he should go with the 1.5.
Okay.
You would go for the experiences,
I think
even
the
as an Atlanta
experiences.
Hawks fan. Like if this was you
Oh,
personally.
if it was me. No, I said if it was me,
No,
I
you would take
sell
the
it.
1.5.
Yeah. Okay.
All right, let's get into.
All right, let's wrap it up.
Let's wrap
Last
it up.
section.
Prediction markets. We got some
It's a big
awesome
one.
AP prediction markets. We're going to talk about a few
Professor
things.
Paramanu.
Professor
legend.
Paramanu in the mix. Before we get into it,
Wait, where's your outfit and your costume?
costume. Oh yeah, honestly, we gotta come up with a new one.
No,
I
it's
feel like
because I have a theory.
What's the theory?
I think because we have an audience today that you're a little self-conscious.
No, I would wear the costume. I don't know if Jade has actually seen it yet. So
No, she's definitely seen the clip.
she's definitely seen the clip for sure. But at some point we will get back into the costume or something different. We'll see.
Okay.
But before we get into it, AP Prediction Markets is presented by Novig, the first ever national prediction market dedicated to the sports world, built natively around the sports trader. Today, we're breaking down the biggest headlines around prediction markets. This week was absolutely action-packed. From new markets to even more lawsuits, let's start this off. The CFTC has ordered prediction markets operator Kalshi to continue operating in the state of New York. New York Attorney General Letitia James sued Kalshi last month for allegedly operating a legal gambling business.
Whoa.
It's out a temporary restraining order to stop Kalshi, and the penalties, if they continue to operate, would be up to $36 billion. The claim was that the legal criteria of gambling is age 21 plus, and that Kalshi is essentially exposing people under 21 to gambling.
Because they're 18 plus, right?
Because they're 18 plus. But the Commodities Futures Trading Commission has stepped in to save the day. Chairman Mike Selig said the agency has used its emergency authority to assert federal jurisdiction over prediction markets, and that the state cannot regulate interstate financial markets, which is technically true given that traders are likely trading with parties outside of New York. They're not just trading with New Yorkers.
Fair.
You're trading with everyone in the nation. And so seems like there was an easy saving grace for Kalshi. They're very aligned with the CFTC. CFTC wants to protect their federal prediction markets, but New York has been catching a lot of heat. We had Tarek Mansour, he was on CNBC calling them out, saying that New Yorkers actually are making money, a $200 million profit through Kalshi's platform. The CFTC has sued New York before, and we were talking to Novik CEO Jacob Fortinsky literally last week, and he said they're suing the state of New York as well as a preemptive measure as well. So it seems like the state of New York is taking a lot of L's on the prediction markets front, but we will see how this lawsuit proceeds. Second, Kalshi and Polymarket. They began allowing people to bet the outcomes on clinical trials and whether the FDA will approve new medications. I didn't even know this market existed, but it's a thing. The idea is to create publicly available, accurate probabilities aimed to help solve drug development information silo problems. So essentially you can trade, hey, if this drug is going to get an FDA approval or not. And what they're saying is that it's going to create information discovery. More researchers, investors will have an inside look of what's going on with what drugs are going to succeed, what drugs are going to fail, how that's going to help with investment platforms later on. It could even help patients understand what clinical trials they even want to go through or experiment with. But ultimately, the media was not very happy with this.
Yeah, I'm not very happy with this.
Yeah, Futurism article posed whether this is just another type of death market. Crazy statement, whether you're essentially trading on cancer patients. You're betting on treatments that cancer patients may be relying on. Also, a lot of bio researchers are maybe not happy with this because now there's potential insider trading risk.
Yeah,
will researchers start tampering and start trading on these platforms? Whether there's guardrails or not, there's still concerns about this.
I mean, the size is also pretty small of those markets. 13 markets, just over $100,000 in volume shortly after launch. Just a rounding error. Like Kalshi did 36 or 32 billion in June in volume, so like in trading volume. So yeah, this is tiny.
I feel like it's like more and more markets, and they're just essentially saying like, how much liquidity can we bring? And I feel like a lot of institutional investors will be investing in this because if they have exposure to any public company that does anything healthcare related, they can hedge using this, right? So I don't know. I feel like the lines are blurring way too quickly. I think it's okay to have some access to like these public markets or investing in this. But ultimately, like if patients aren't comfortable with this type of trading, I don't think it should be a thing.
Agreed.
Last thing, daily fantasy and prediction markets operator Underdog is being sued by Aristotle Exchange, an exchange that they recently just bought after selling their business to IG Group for $1.3 billion. They acquired Aristotle Exchange to make sure that they could build out a prediction markets in-house. Okay. By July, they were listing out their own sports contracts, and at the end of the month, they sold for $1.3 billion. But here's the catch. They have this management incentive plan of up to $850 million specifically for their employees. Okay. And Aristotle sued because they were saying, hey, we want access to that $850 million. It's part of the valuation. And Jeremy Levine, Underdog CEO, was like, nah, that makes zero sense. He actually had a tweet. I'm going to say a few statements from it because it's pretty hilarious. He said, apparently, the Aristotle folks are unhappy with the money that they're making from the sale of their license. Even though they'll end up making more than anyone else in our sale to IG, they're trying to extract more. They told me as much as when I called to tell them about our deal and how I was going to get them the liquidity they were so desperately seeking. And they said, give us some more or we won't sign. So essentially, Aristotle's kind of mad that they didn't get access to $850 million. But at the end of the day, they wanted liquidity. They probably had a bunch of Underdog equity, and they're like, hey, this is the perfect time to sell now that you have an in-house prediction market platform,
Right.
and we have a brand. I never heard of Aristotle Exchange before
Me
this.
neither.
And so once they sold, they're like, oh, wait, Jeremy Levine actually made a very smart play and make sure that his employees eat for performing extraordinarily well in the future when they had already sold. I think this is a no-brainer. I'm siding with Underdog here based on all the
Same.
information presented, but it's getting spicy out here, man.
It's crazy. I think that AP prediction markets was jam-packed. That was good. I think all of those were value add. And I think, if I'm correct on my timing, we might have capped that at under an hour. So
Let's go. That
Let's
was
go.
actually, capping under an hour is sometimes
It's an
difficult.
accomplishment
It's an
nowadays.
accomplishment nowadays. There's a lot of stories in sports.
thanks for tuning in. I should have said this in the beginning. Make sure to like, subscribe, and leave a comment, and follow us across everything.
Fourthquarter.com, thefourthquarter.com, spell it out.
thefourthquarter.co.
.co, sorry, thefourthquarter.co. We post
messing up.
newsletters once a week, every Thursday. We got to get the .com though. We will get that.
Hopefully soon. See you next week.